Massive layoffs begin and the worst is yet to come. The nation is in a financial crisis. The travel, trade, and tourism sector have all been hit hard by the recent pandemic outbreak. Layoffs, cutbacks, and growing debt are on the board as a result of the damage, which might linger for years. Can America survive huge job losses, historic bankruptcy, record debt defaults, and a dying economy in freefall? An iconic GDP fall, a financial freefall, and share price tiers are at an all-time high. Unbelievable! It's just incredible that the share market bubble doesn't stop. The multi-billionaires and trillion-dollar corporations are 100% bullish. Stocks can only rise. How? Big corporations are cutting off thousands of employees as the pandemic layoff ban expires. Stimulus efforts stall anew, and the new wave of the slump or depression begins. A major layoff wave is continuing and is threatening to become a tsunami. Layoffs that were supposed to be temporary have turned into lasting job losses. As the winter weather sets in, another round of lawsuits and lasting closures is likely. Vast numbers of layoffs were recently announced by Shell and Atlantic, as well as layoffs by Goldman Sachs Group, Allstate, and Marathon Petroleum, only one day after Walt Disney announced 28,000 layoffs from all over its sites. More than 2,000 people would lose their jobs at Marathon Petroleum, while 9,000 people would lose their positions at Shell. KPMG will be laying off 1,400 people. Goldman Sachs is laying off 400 people. They don't require as many people to keep track of stock buyouts. According to the Wall Street Journal, major retailer closings in the United States reached a new high during the first half of 2020. That year was on track for high foreclosures and sell-offs. As per Bloomberg, foreclosures in the New York City area have increased by 40% over the outbreak. New York City will be hit by a long-term financial collapse that hasn't been witnessed since the 1970s. Huge layoffs are also being made by airports. Starting soon, American Airlines and United Airlines will lay off a total of 50,000 employees. As per McMaster University in Canada, sociology professor Art Boudros says less than 5% of Fortune 100 corporations declared layoffs in 1979, but nearly 45% did in 1994. According to a McKinsey survey of 2,000 U.S. corporations, 65% used layoffs between 2008 and 2011 during the crisis and its fallout. Layoffs have now become the norm in the face of an uncertain future marked by rapid technological progress, turbulent markets, and severe competition. Other facts on layoffs should make companies think twice. Deepak data of the University of Texas at Arlington showed that layoffs had a positive to negative influence on share prices in the days after their disclosure in a 2012 assessment of 20 studies of businesses that had gone through layoffs. Data also revealed that after layoffs, a lot of firms experienced a loss in profitability, which continued for 3 years, according to a linked study. Furthermore, a research group from Auburn University, Baylor University, and the University of Tennessee discovered that businesses that have cutbacks are twice as probable to declare bankruptcy as businesses that do not. Senior executives usually disregard such results. Some claim that because corporations terminate employees because they're in terrible financial condition, it's unsurprising that their financial performance doesn't improve. Layoffs have become so rooted in the business world as a quick fix for cutting expenses that executives are oblivious to the fact that they cause more problems than it solves. If Congress decides to bail out these firms again, there must be certain conditions attached. Estimate the total pay for all his airline workers, from baggage carriers to pilots. Until the loan is repaid, that's more than the CEOs and all senior management compensation combined. Doug Parker will not be paid a salary of $12 million. There will also be no share buyouts with borrowed funds. If Washington turns up with a $25 billion solution for airplanes over the next few days, American Airlines CEO Doug Parker said that the corporation will halt 19,000 layoffs due to start on Thursday and restore the workers. That works up to about $1.3 million per worker for a workforce of 19,000. I'd rather give each employee $1 million. Employees would be better off receiving direct government compensation rather than relying on airline bailouts. Let's face it, the airlines spent 95% of their profits on buybacks over the last 10 years. We should not hand out any money to them. The luxury suite must be fired first, and then the entire building should be removed. There are two types of debt: fair debt and toxic debt. This is the worst of the worst. Airways and other firms have been collecting funds in any manner possible in order to burn it through excessive financial abuse. Excuses and apologies reinforce the idea that a company's activities, as well as planning and response to change failures, contributed to employment losses. Once the CEO gives the word relative to any other carrier, share prices drop more in reaction to excuse and apology-based cuts. Basically, when the layoff notice emerges from the CEO, investors react badly, and the layoff reasons can be linked to a lack of response to domestic and foreign events. Using a human resources department, defense advisor, or some other leader to make the news instead of the CEO can reduce stakeholder hostility. The upcoming study evaluated unilateral and forced layoff actions and results at 3 Canadian businesses to guide layoff policies. There were 976 worker profiles reviewed in all. The findings imply that using voluntary layoffs changes the quality of the workforce that stays after the layoff. A worker who would have been laid off by the company would not have asked for a layoff on far more than 19% of occasions. The worker who would have opted for a furlough was not chosen by the company for an enforced layoff in more than 24% of the situations. Employees' unilateral layoff choices, on the other hand, are mostly influenced by the quality of the severance payout. Employees may be enticed to opt for a layoff by the severance pay. Employers face higher layoff expenses as an outcome of this, as well as the departure of individuals who would not be picked in the event of management-led forced layoffs. Well, that's all for today. What are your thoughts on the subject? Share your thoughts with us in the comments section below. I hope you liked the video. If you did, make sure to hit that like button and subscribe to the channel so that you never miss any amazing video from the Wealthy Brains. Thanks for watching.